What's up, guys? I'm Jay, DCA Adventure, back again with a brand new video on how to use Bollinger Bands. We're going to keep this simple and do it for beginners. If you guys like our content, please like and subscribe. Hit the bell for notifications. Also, this is not financial advice. Trade at your own risk. And if you guys would like super secret access to the private Discord channel that we have in our Discord there, you need to join our Patreon group. My tier is called Trading with the View, and by joining our Patreon, you guys will get access to the DCA trading scripts and any of the other trading scripts that I have coded. And we do have several different Discords that you guys can join. Those links will be in the description. With that being said, guys, let's get started and jump right into it here. Bollinger Bands. It is an indicator that is overlaid on your candles. I'm not going to go into John Bollinger made them, but we're not going to go into when they were made and how they're calculated and all that stuff. We're just going to go over the basics. I'm going to keep it simple for you. If you guys want to dive in deeper and learn exactly how these bands are calculated, you can do so on your own time. And it's good exercise and good practice for you guys to do that. I kind of give you the introduction of the indicator that we're going to use, and then give you a general idea of how to use it, and then you can go off and dig deeper into it and build your strategy accordingly and all that good stuff. Basically, how the bands are calculated are with standard deviations, and all a standard deviation is a measurement of how far away an asset's price is to the typical relative price that it is. The bands are, the top band and the bottom band are showing the deviations. Okay, and then you have your middle band, and it's not really a band, this is a simple moving average. The default is the 20 moving average when you pull your Bollinger Band indicator up. And you can go right onto your indicators in the trading view and just type in Bollinger, B-O-L-L, and it will bring it right up. It's the very first one. You want to pull this up. So from the middle band, this is your average, simple moving average price. This is about the average price of the asset. In this case, we are looking at Bitcoin. But you can use Bollinger Bands for Forex, stocks, indices. You can use it for anything. It'll works on any time frame. We're going to talk about double tops and double bottoms, but they're not the same double tops and double bottoms that we normally look at and normally talk about. These will be a little bit different. The bands they're pretty simple to trade. Most traders buy at the bottom band and they sell at the top band. I'm going to show you guys a little bit better way to use it and calculate it. But first we're going to go into the settings, and I'm going to show you how you can change the standard deviation, or you can change the middle band, the simple moving average. I like to put the standard deviation on 2.5 and sometimes even 3. And with the standard deviation, okay, so right now, your top band is 2 standard deviations away from your average price. Your bottom band is 2 standard deviations away from your average price on the bottom. So if we use 1 standard deviation, if we change the settings, we went to one standard deviation, it's only a measurement. The measurement's only a little bit far away from the average price, top or bottom. If we go to 2 standard deviations, we are a lot more away from the average price, and so on and so forth. So if you go up to 2.5 deviations, or you go up to 3 standard deviations, you are a lot of room and a lot farther away from the average price with the top band or bottom band. Like I said, I like to trade, if I'm using the Bollinger Bands, I like to use the 2.5 deviation. And you guys can go in here and you can make these lines thicker so you can see them a little bit better. Just click on the color, come down here. We'll go like that. But you go over your inputs and your length. This is where your simple moving average number is. You can put whatever you want in here. I keep it on the 20. You can actually change this to, like, let's say you were trading on the day chart or the monthly chart and you wanted to look at the 200 period moving average. You could put that in there. You put the 50 in there, so, you know. However, here I put 2.5. You can go 3. If we go 3, let's just watch the bands. See how much farther away they move from the average price. So if we were trading, I'm going to move it back onto 2.5. It's freaking me out there on 3. Okay, so we know already from what I just said that the higher the standard deviation, the farther away from the average price. So if you are trading the bands and you're trading on a 2.5 standard deviation, you know that when we hit the top of the band, that's a pretty big move because it takes, you know, a hell of a lot. There's a lot of room from that average price. So if we're hitting the top band, it's something to be aware of and be ready to figure out a strategy and what you're going to do and what price action may do. So you can kind of assume that your simple moving average, or 20 here, will act as support and resistance at times, just like the bands will act as support and resistance at times. Some people say that the bottom band is oversold and the top band is overbought. You can look at it either way. Whatever you're doing, though, with your strategy, you can trade Bollinger Bands all by themselves, but I do not recommend it. You need to have some sort of help with confirmation, and this is where you would want to use a relative strength index or the MACD, one of those kind of oscillators. Or you guys could use the DCA Adventure Trading Script that has the MACD, the RSI, the momentum waves, the VWAP, money flow index. It has several different things, bullish and bearish divergences. It has it all coded in there. So you only need just this, just the DCA trading oscillator. You learn how to read it. You build your own strategy with it, because what works for me may not work for you. And you use this for confirmation as to whether we are in overbought or oversold areas. And as you can see here, we did have a nice little drop, and it showed it right here on the oscillator that we did get into the oversold. But this is where the double tops and double bottoms come in, and I'm going to show you guys. So we're going to put the DCA trading script away for right now, and I want to show you guys how you should trade these. Just flip to a 1 day. Right. Stretch it out here. Okay, so you have your upper band, your bottom band, and your middle band. When you see the bands starting to close together, like we have right here in this area, that means vitality is low, and expect it to increase soon. And when the bands spread apart, that means that vitality has increased, and there is going to be a break out to the up or to the downside. Usually when the bands squeeze together and they break apart, it is usually a breakout. So you do end up with getting a decent couple runs. But if you were like all the other traders and you only bought at the bottom of the band and you sold at the top of the band, that may work sometimes, but it's not the best strategy to use going into this. I'm trying to find a decent double bottom. Now the double bottoms when using Bollinger Bands are not the same like how we talk about other double bottoms and double tops, where a price comes to the same high and rejects at the exact same level and then breaks down. Or when we come down and test a major part of support and we hit the lowest of the low 2 times, and we reject and we break to the upside. It's not that at all. These, you are looking for the deviations in the price action. Here's a decent double bottom. So we came down. We went outside of the bottom band. Okay, we ended up coming back in. We came down, hit the bottom band again, but stayed inside. We hit the bottom band again and stayed inside. Now what we're looking for is where we came outside of the band and then we tested it a couple times, and then you see the price action deviate away from the bottom band. This is considered a double bottom when trading with the Bollinger Bands, and it's the same with your double tops as well. Here's a decent example of a double top. We came up and hit the top band. We came up, tested it again, rejected, and then you see the price deviate away from that top band. As soon as you see that deviation, you can guess that price is gonna go the other way. Typically, price stays within the bands, depending on what deviation you're trading on. If 3 standard deviations, price is usually between 90 and 95% of the time inside of that deviation. The lower you go, the lower that percentage gets. I think if you're trading on a standard deviation of 2, that it's only 80%, 80 to 85% of the time that price will stay inside these bands. And this is with Bitcoin. Those percentages are different with stocks and other stuff that you are trading. Those are just with Bitcoin. But the bands are super easy to trade if you are trading just the standard deviations and you're waiting for bands to constrict and get tight. That's the hardest part, is figuring out whether we are breaking up or breaking down, and that's where you guys also need to know about support and resistance, and you need to know whether we have tested a major area of support or vice versa, we have tested a major area of resistance before you can make a decent judgment call on whether we are going to break up or break down. As you can see through here with the constricting of the bands, we actually tested the upper band and tested the lower band. Well, no, we didn't. We got close to it. But looking at this when they constricted and seeing that the price never made it to the bottom band and we actually started to deviate away from it, I would have went long here. We can check the oscillator and see what it would have said. Now we did get a small momentum wave break to the upside there. The VWAP started pointing to the upside. Actually, to be 100% honest, guys, I probably would have sat on my hands right there, just because the oscillator is in the middle for the most part in this area. It still would have been a decent trade. You still could have made a little bit of money off of that, but it's better to have confirmation every time. to make your decision, because the more confirmation you have, the more things you're using in conjunction with the Bollinger Bands, the higher probability of you having a profitable trade. And it's each their own, I guess, on how you guys trade it. I don't know very many of the guys in my Discord now that trade with Bollinger Bands. I like Bollinger Bands. I like Keltner channels better. Keltner channels are a little bit, they're more accurate. Price seems to stay inside the Keltner channel more than it does with the bands. But when my strategy when I'm trading with these bands is I'm trading the double tops and double bottoms. I'm not so much looking, oh, we hit the top of the band, so it's time to short. It doesn't work like that every time. We may hit the top of the band and then keep on going. It just all depends. And then, like I said, you use your support and resistance. You use your higher highs, higher lows, lower highs, lower lows in conjunction with everything that you're doing. Another good double bottom would have been right here. This was a classic double bottom for a Bollinger Band. We came outside of the band, ended up coming back in, came outside the band, and then closed outside of the band. So that right there would have hit the light on and said, all right, it's time to start watching this. As soon as I would have seen this green candle deviate away, that's a pretty good distance. Even that red one would have been a key to acknowledge that, hey, we're probably going to have a change in the trend direction, and it's probably time to get ready to enter a trade here. But as you can see, we came out of the band 2 times there, came back in, tested it again, and then deviated away with the big wick and then the green candle. That would have been a perfect longing opportunity. And then if you look down here on the script, you do have a nice momentum wave that dipped down into the oversold, and it was starting to go up. So you could have followed this and caught you a nice long on this drop. Or you could have used simple support and resistance and said, hey, we have major support down here. So this is an area I'm going to be watching, because we did have a nice head and shoulders up here. And then we dumped pretty good on that head and shoulders, and combined with a death cross and stuff we had over here somewheres. But I've already trading this. I already knew about this area, so I was ready and prepared for when we did have this big drop. A lot of us were. This is when we fell to 3,800, I think, around in there. But if you were trading just the bands only and using the double top and double bottom method and how it deviates and price action deviates away from it, you could have caught that long there. Same over here. Well, let's see if we can find another. Let's double top this time. So here would have been a nice double top. We came up and we actually went outside the band not once but not 2, 3 times, came back in, and then you got the deviation from the top of the band down to your candle, and that's a pretty big area right there to deviate from. So as soon as you would have seen that, bam, enter short, that would have been your confirmation. We did even have a little momentum wave starting to point down, but as you can see, we were not in overbought area. We were close right there, but we didn't quite make it. Over here, and you can use Heiken Ashi candles with the bands. I like using Heiken Ashi. You guys know that. The double top and double bottom method will still work with the hike and the she, and then obviously the script works a lot better with it. Another way that you can kind of be ready, kind of be ready for the breakout to the upside or the downside is by looking at which direction the top band or bottom band are pointing. So like right now we are constricting, and this is on the daily chart. So normally when we constrict for a decent amount of time. It's usually, you know, a couple weeks. Let's see if this measurement will tell us how many days. So this little area here was a 26-day squeeze where price action and volatility was low. And it's like that almost every time we squeeze. It's usually, you know, a week or so time period on the daily when it does that. Here was another 12-day squeeze. Another 21-day squeeze. 19, 20-day. So, you know, it's, if you see the band starting to squeeze like this, you can probably figure, you know, at least a good solid, you know, 15 to 20 days that we're going to be trading within this range, and then be ready to be looking for the breakout. Obviously, on the day chart, it's not going to squeeze and break out the first day. You know, it just doesn't work like that. It will take quite a while. You can change a simple moving average. You can turn that into whatever you want it to be. I just keep it on the 20. It keeps everything in the middle there. You just want to make sure that if you're changing your settings and everything, that you know exactly how many standard deviations you have on, what you're using, and you don't get everything confused, because messing with the settings on the Bollinger Bands and messing with standard deviations can screw you up quite a bit. And honestly, guys, that's pretty much my strategy when trading them. I don't like to tell people that, well, because when I first learned, I was taught that when we hit the top band, if we come down and hit the simple moving average and we reject off of it, look for another spike to the top band. And you can see that in some places it does do that. We hit the top band, came down, hit the top band again, rejected off the simple moving average, right back up to the top, right back to the simple moving average, right back to the top, and then finally broke through. And then obviously using the simple moving average as resistance, that works too sometimes, but it doesn't work out as much as you would like it to. That's why playing the big spread, I don't like to. It's easier to wait till after the squeeze and then the breakout and catch the bottom or catch the top for leverage trading. That way, because if you get the breakout wrong, you're going to be screwed unless you're using a stop loss like you should be. But you guys would be surprised how much I scream use a stop loss, and how many times I get messages saying I got liquidated, I didn't use a stop loss. So it happens for sure. Use a stop loss. And if you like buying at the bottom and selling at the simple moving average, or waiting to see if we break the simple moving average and selling at the top band, I mean, that's a perfectly fine strategy. But just make sure that if you're buying at the bottom, you want to buy as close to the bottom band as you can, and then put your stop loss on the outside of the band somewhere. But and same with your take profit. Don't put your take profit right at the top of the band. Bring it down in just a little bit. Don't get too greedy, because a lot of times we may hit the bottom band, make a run to the simple moving average. We break the simple moving average, and we just about hit the top band before it starts to deviate away from that top band. and then the change in trend comes. So that's why I like playing after we have the squeeze and the breakout, because, okay, we squeeze, I know something's about to happen. Do I want to take the chance on whether we're going to go up or down, or just play the break? So what you could have done was waited for the breakout, and you could actually went short here once you had confirmation that we were breaking down. Or you could have done what I like to do and wait until you get these double bottoms and double tops and the price action deviates away from the band. So here we had broke outside the band a couple times, didn't close outside of it, but we did break out of the bottom of it. And then you can see here, as soon as we started to deviate away, you could have went long. You would have made a little bit there, 8,000 to 8,700. Had been a decent little trade, but then right back into another squeeze. So you wait again, you be patient, and then boom, we did get a breakout, and you could have just waited and look. As soon as you seen it hitting that band, and we tested a couple times and then deviated away, would have been a perfect shorting opportunity. That would have been a, let's say you got in right here, because this is where the deviation happened. This is where you're waiting for confirmation. Oscillator is showing. We were getting up there to, weren't quite at the overbought, but you could have went short here. And let's just say you went right on the inside of that band. That's a 28% move. Now, granted, that's a 61-day trade right there. 61-day. Or you could have went to right here. You'd have been in there for 23 days, 24 days. That's a long-ass time to hold a trade. Long time to hold a trade. But by doing that, I mean, that would have been life-changing trade depending on how much you used. And if you're using everything else that we have learned throughout the videos with support and resistance, you would have already came in here at the beginning of the day, and you would have started putting your areas of support and resistance down. And you would have known when we hit this top band that, hey, there is a pretty big area of resistance over here. And then you would have looked at everything else, looked at the oscillator, you would have looked at the deviation, and if you would be using RSI or MACD, looking at any of those things. But those are lagging indicators for the most part too. They're not going to be, they're not coded to be as quick as this trading script is. The script is on top of it for the most part. There's very little lag, and there's no repainting. And what I mean by repaint, a lot of people, you will get their trading script and it will have buy and sell signals on the script. Well, it may print a sell signal, and then we get a humongous pump, and you seen that it printed that sell signal and you went short because it printed that signal, and then you got wrecked. And then an hour later you go back and look at your chart, and lo and behold, you see that it erased that sell signal and now has put a buy signal there. That is what repainting is on these trading scripts. This script does not repaint at all. 0%. It just doesn't do it. It doesn't happen. We have coded the correct securities inside of it, so it doesn't do that. So that's just something to be careful of if using somebody else's trading script other than the DCA, to be aware of. And that's pretty much it for Bollinger Bands and the strategy that I'm using. So we're just going to go over it and talk about what Bitcoin's doing right now, what I'm looking at, what I think could possibly happen. This is the monthly chart. And as you can see with the monthly chart, that it is making a bull flag. This is a bull flag on the monthly. This is BLX, Brave New Coin Index. I use this looking at my overall long-term stuff. Any historical data, it usually has pretty as far back as you can go. But what we're looking at here is a typical bull flag, and what a bull flag is here you got your post. Usually starts down at support. Alright, my line drawing. So we got our flagpole. And then what price tends to do is actually make a flag pattern like this. Oh my. This is what a bull flag pattern is. And a bull flag is a continuation pattern, a bullish continuation pattern. Usually once we get to bull flag and we get to the end of the flag here, we will get a break to the upside. You flip the bull flag upside down, and that is a bear flag. So if it, dang it. So if you got your flagpole up at resistance, starts with resistance, we have a parabolic move straight down, and then all of a sudden it starts doing one of these numbers. That's a bearish bearish flag there, and that's a continuation pattern to the downside. Now we are I like to go off the bodies when using regular candles. So here we got our flagpole. And this is the flag. Now we have tested down here at the 3400, and that was here in December of 18. That was where we bottomed out. And as you can see, we came all the way up and we tested that top band at the 13,000 area, deviated away from it, came back inside of this flag. We have not closed outside of the flag yet, top nor bottom, so it's still valid. Basically, I'm looking for a retest of back up here to the top of the flag. And if you notice, right in this area is a 10,500 where we need to break in order to make a new uptrend. So do you guys think that we are going to have a valid bull flag and this is actually continuation and we keep on moving up and break the flag? Or do you guys think that we're going to break down? Leave it down in the comments below what you think is going to happen. Whoever has the best answer, maybe we'll give away a script to or something on the Friday live stream on tomorrow night. And now I'm also looking at these death crosses that we have on the get rid of this Bollinger band. We got some death crosses coming up on the 2 and 3 day, so it's something to be aware of. there's two different narratives of obviously either we're going up or we're going down, and I'm going to say that we're going to do both. So I want you guys to be ready for both scenarios. Look for the key things to say whether we're going to go up, and look for the key things that say, hey, we're breaking down. And here are the things that I'm going to show you to be aware of and to be watching. Because if you're not watching these things and you're not aware of them, then you're going to miss out on the trade. Okay, so the 3-day. Yellow is my 100, 21, get that 21 off there. So the 3-day, we did have the 50 cross, the 100 there. We did not dump right at the cross. We waited like they normally do. And then we did have a head and shoulders pattern play out on the 3-day as well. There's your shoulder, there's your head, there's your other shoulder, and then the dump down. And we dropped the 3-day, yep, it's showing 4,000. 3,800, 4,000, right in there somewheres. On the last video, guys, we did talk about the trend line and how this was a valid trend. This is not valid anymore because we have broken the trend line and closed underneath of it. Show you a little bit better. And as you can see on the 3-day, we tested the 200 period moving average and rejected. So, and it don't look like it looks like we used it support for a little bit. Yeah, when we're above it, we're using it as support. When we're below it, it is resistance. So I would be looking probably for a retest of around the 7,100 area, and watch it there. If it does not break through there, then we're going back down, guys. And not only do we have resistance at that 200 period moving average, we have resistance here with the trend line that we broke. Because now that we broke it, you can see that we broke through, came back up and tested with this doji candle, and it got rejected. So it's you gotta be aware of these things. And like the candles, I just said how that not really technically a doji. This one over here is. You can see that we had the green candle before, and normally it does the opposite of what was before it. And boom, we did have the breakdown. So you guys could have caught a short there if you know how to look at candles and know what price action and what it means and what the candles do. Probably should do a video of that. So we did have that death cross here. Looking for the 50 to cross under that 200 period moving average. And if it does, like it did back here, November 2018, then we'll dump back down. And if it does cross, obviously we'll be looking at the 6,000 because it's been pretty good support. 6,000 all the way up to 64, 6,500 has been tested a couple times, and so has the 3,800 area, 3,900. So I'd be looking for 6,000 first. If we break through that, then I'd be looking for your 4,200 area. But if we go back to the monthly and look on that bull flag, if we break down to the bottom of that bull flag and we test the bottom again, that's down at $2,500, you guys. I'm probably going to get a bunch of shit for saying it, but I'm just telling you what is in the chart. And with the lines, how they're growing on there, if we do test the bottom of that flag there again, that's $2,500. That would I'd be buying a few Bitcoin for that price for sure. So that's on the 3-day. Let's scroll down here onto the 2-day. as you can see, we did have a death cross here, and it crossed the 200, and we're getting ready to cross the 100. We crossed the 200 period moving average, and we are now starting to dump. This is on a 2-day, so I mean, yes, we did get a nice little spike back up to 7,000 here, but it's definitely possible that we could go back down. We crossed this 100-day. It's looking like it's going to. We are curving to the downward side, so it does look like it's going to be a textbook death cross. Be aware of it, guys. Again, my outlook is still pretty much the same as the last video. As I said, there's a couple key areas that we need to look for in Bitcoin to break in order to keep moving up. I think a lot of people got stimulus checks here the last couple of days, and that may have been the reason why Bitcoin spiked here a little bit. And there's all kinds of. We did test a pretty good area of support too, so I get that. Usually when we get these real sharp V bottoms like that, we get a parabolic move down and a V bottom, and it just shapes like a V. We typically do get really nice runs out of that. I still really wanted to see on the 1-day us test the 200-day moving average up here at the 8,000 and then continue to dump. That is still a possibility, but right now that 50-day moving average is holding us down, as it's acting as pretty heavy resistance. We just cannot seem to break above it. In the Discord groups last week, we did trade the 50 moving average. It would have been good to trade it every single time it got tested, from April 6th to present, to the 16th. So that's 10 days or so of really nice trading, shorting the top every time, that we came up and hit that 50-day. Should have been entering into a short until we break above that 50-day and then come back and test it as support, then take off. I wouldn't be looking to long that. Obviously, you want it to, you kind of want it to break above it, come back down and bounce off of it as support, maybe once or twice, and then it'll give you confirmation and take off. It just all depends, guys, on how you trade and what your strategy is and what you're looking at. But I still would have liked for the death cross and everything. I would have really liked it to have came back up and tested that and then dumped. But you never know. It's still possible. Still could happen. I'm still watching that as of right now. And definitely, guys, we make it back up here and test it again. One of these times we will break through that. There's just a bunch of people selling in that area. You can see that old support becomes new resistance. Always look left on the chart, and it's showing it right there. Eventually, we're going to run out of people selling Bitcoin right here. Okay? Eventually, there's going to be no more guys short selling Bitcoin, and we're going to be buying all those up. And then once that happens and there's 0 people selling, then we will make the breakthrough that 50-day, and onward and upward we go, guys. Ethereum has made a couple nice moves. It was up pretty good. Anytime Bitcoin gets a decent spike, everything else is spiking up as well. All the altcoins and such. You'll get the big run on Bitcoin, and then altcoins tend to follow and lag behind Bitcoin because people are taking profits from their Bitcoin and they're putting them into the altcoins. That makes the altcoins pump, and then you'll see the altcoins pause out. They'll start to die down. That's people taking their profit out of the altcoin, and they're going back over to Bitcoin, and you'll see Bitcoin pump again. It's just an endless cycle, rinse and repeat, over and over and over and over and over again. We'll take a look at that monthly time frame one more time. Look at that bull flag. I want to show you guys at the bottom of it. And two, for a bull flag, you guys don't want the price to come back more than halfway of the flagpole. And like right about there is halfway. So let me draw a line real quick. We'll show you the bottom of this trend. And this is on the monthly, guys, so this bull flag could take forever. I mean, you look down into here, we test this and we come back down. Down here's 2,700 area. And usually we don't go to the end of the flag. We usually pop off somewhere around in the area. But it could be all the way into October, November before we see the monthly bull flag actually play out and we take a shot to the upside. But I would like to see it break through this heavy resistance we have here at the 7,000 mark and make its way up. But yeah, I just wanted to show you guys that's down pretty low. If we test the bottom of that flag again, that's some good cheap Bitcoin, guys. Good cheap Bitcoin. But alright guys, that's all I have for today. I got to get the schooling done with my kids. They need the internet. I'm having internet issues right now, so I had to steal their internet, and I know they want it back. I can hear them upstairs causing ruckus. So I hope you guys enjoyed today's video. Hit the smash the like button for me. I'm sorry. And definitely leave a comment and let me know what you guys think Bitcoin is going to do. Whoever has the best answer, whoever is right, will potentially win script on Friday live stream. So make sure you guys tune in on Friday. Alright guys, you have a good night. Stay safe. Wash your hands. Stay in the house.